The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, everyone around the world. How's everyone is doing this wonderful Wednesday afternoon? How's everyone is doing? Thanks everyone for joining this free seminar about the world indices. We're gonna start is 108. We're going to start around 110, 111 to allow the hundreds of traders around the world to join us. My name is Eric Morera. I'm the founder of Elliott Wave Forecast. And usually we do this type of seminars once or twice, once every 2 years, put it that way. The seminar is going to last about an hour. We won't give you guys any short-term view of the indices. I mean, 1 hour view or anything like that. We're going to follow a format. I'm going to answer to the best of my knowledge all the questions that you guys might have. And we're going to answer a big question, right? Over the last, and I remember, over the last 15 years, most of the traders around the world are looking. Yeah, the seminar will be recorded, yes. Every trader, or most of the traders, to be honest, they always been looking for a crash across the indices, right? And the thing is that it never happened. I'm not showing the screen yet. I will show in the screen when we start the seminar. I say in about 2 more minutes, 3 more minutes. So everyone always looking for a crash across the indices. And everyone keep wondering why the indices keep rallying and there is no crash. That view. Good morning, hello, good afternoon, good evening, everyone, to the hundreds of members here today. Oh, members, no, traders. I say member because I used to our live session. So many traders have lost fortunes in trying to find or waiting for a crash across the indices. As I say, we're gonna try our best today to give you guys our best knowledge. We're going to explain a little of Elliott Wave. Nothing had crashed in the market. We're going to give you guys our way. We're going to give you the pro of the Elliott Wave theories and the downside of the Elliott Wave theory also. So we're going to start in 1 minute. At that time, I'm going to be sharing the screen with you guys, and we're going to be explaining to you guys what we're looking and what we're going to cover in the seminar. All right? So thank you, everyone, for being here. Honestly, I know for traders in Asia, I know it's late. But there is no way to do it at a better time for an audience of around the world, right? So 30 seconds and we're gonna be starting. Again, I'm gonna be trying to answer you guys as much questions as I can, right? As many questions as I can. But I'm gonna do my presentation and then you guys gonna be asking questions. All right, let me share the screen and let's start this seminar. Again, my name is Eric. Thank you guys all for being here with Elliott Wave Forecast. We do have a lot of new good things coming in the future for Elliott Wave forecast, and very proud of our service and making hundreds and hundreds and thousands of members happy around the world, right? And a lot of followers also around the world. So today is the 5th of June of 2024. A little bit about us. We are a company that was created in 2005. We are a group of analysts, and we provide a 24/7 service to our membership. Today, we're going to cover the index and asking a question if a crash is coming. The seminar, like I say, we're going to look at the future of the path of the world indices, right? And I won't be answering questions or comments about individual positions or questions. I'm going to be answering questions about what we're going to be covering in the seminar. So, like I say earlier, we're going to be covering the following topics during the webinar: the degrees of Elliott Wave cycles, so you guys understand our language. The basis Elliott Wave structures, technically 2 Elliott Wave structures, the 5 waves, and the nest. We're going to show some indices within the grand super cycle. And I want to remind you guys all, this seminar is about grand super cycle. This seminar is not about a 1-hour cycle. We're going to use the Nikkei from Japan, the FTSE from UK, ExxonMobil, Meta, Google, to CAT, CAT also, Southwest Airline to provide our views. We're gonna explain what does the October the 22nd cycle means across the indices. We're gonna use the indices path and relate it to the dollar index. And we're gonna provide our view about the long-term path across the indices, right? That's what the seminar is gonna be all about it. So let's start it. These are the degrees of the Elliott Wave cycle. Yeah, the recording is gonna be posted in our YouTube channel, also in our homepage, right? We shall recommend you guys all to subscribe to our YouTube channel. A lot of free information there for free, right? So the market, you're welcome, Stefan. The market, guys, it doesn't move in a straight line. Nobody has ever seen the market move forever in a straight line. I want you guys to understand the following: that in the market, there are 2 sides, buyers and sellers. But technically, there is only one trend. When it comes to the indices, there's only one right side of the market. I said most of the waiver, I started one day to use and get fascinated with the Elliott Wave theory. My background is as an engineer. And like I say, I get fascinated about patterns, math, and other stuff. That's my background. So I started, as most of you guys have started, crashing the wave, going over every single details in the wave, and reading the basic Elliott Wave structure. Over the years, I found out that the Elliott Wave theory, the way that most of you guys look at it, the way that most of you guys use it, it doesn't work because it is very suggested. We, in Elliott Wave forecast, we use a different degree or different way of the Elliott Wave theory. We have add to the three main rules of the theory, which is that wave 3 cannot be the shortest, that wave 2 cannot pass the beginning of wave 1, and that wave 4 cannot overlap wave 3. We have add another 13 new rules, which we keep it to ourselves. We don't share with the world. We keep it to ourselves. We own the copyright and it belongs to us. So why? Because the world had changed. Back in 1920s, 30, when the theory was developed, you were driving a car. That car, that machine, is not the same car that you're driving today. Consequently with that, you cannot pretend, I don't know that person work. I never seen it. You cannot pretend that, but yes, there is a huge difference between our Elliott Wave theory when you compare to the main Elliott Wave theory. So, like I say, we have added a lot of new tools. We have added a lot of new rules to make the theory works in today's world. My bad. Everyone should understand one thing. The world has changed. Don't you guys agree? The world has changed. 1930s, there was no computer. 1930s, there was no internet. 1930, the degree of intelligence of the human nation, of the humankind as a whole, is not the same as it is right now. So, consequently with that, we have added those rules. But we still use some of the theory. We still use some criteria of the original Elliott Wave theory. Most of you guys had seen our blue boxes, right? In our charts. Everyone here have seen our work and the blue boxes. Anyone have seen the blue boxes that we present on the charts, right? So those blue boxes is a product of market nature. Those blue boxes are a product of the way the market moves and incorporating high frequency trading to the Elliott Wave theory. But like I say, we are different, but we are better in a humble way. We're different, but we're better. Right? We are different. I know the service. I don't know the work, Betty. So we are different, but we're better because we have progress and evolve with times. I want you guys also to understand, besides the concept of the old Elliott Wave to the new Elliott Wave, right? I want you guys to understand also the concept of human progress. The worst a trader can do is being bearish the indices. Have any of you guys ever think about it? The worst a trader can do is being bearish the indices. Have you ever think about it? And unfortunately, that is what most of the traders are. For some reasons, many traders are bearish in the indices. and looking for the crash? And the answer is very simple. And I'm a very bullish individual in the indices and in life because 2,000 years ago, we didn't have the same level of living that we have now. We were used to live in caves, in the wood, right? And now we have nice houses, air conditions. We can fly from US to Europe in about 6-8 hours, depending where you are. We can go from US to Asia in 14-16 hours. Before, it took years to somebody come from Spain to Cuba. It took years. Now that flight takes 8-9 hours. So we have progress. And the indices are a representation of progress. But they don't move in a straight line. So before we enter into details, I want you guys to understand two concepts. We are different. We use the basis of Elliott Wave with another 13 rules that nobody has that in this world. And second, we believe that the trend on the indices is always bullish and that any pullback in the indices is an opportunity to buy the indices. Whoever is calling you for a crash, they are here for a nice surprise. And the fact of the matter is that when the indices pull back, traders want more and more. Traders getting filled. And I do recall we did a seminar very similar to this one in the middle of COVID in 2020. And we were yelling to the traders, buy the indices, buy the indices. Don't look for the crash. At that moment, our competition, they were looking for a super crash. The war is coming to the end. Another 2009 is coming. What a pleasant surprise. And always gonna be like that. I don't deny that one day there will be a correction like it was in 2009. And which we will correct the grand super cycle. Which, if you look at my screen, these are the degrees of the cycles. There is grand super cycle, cycle primary, and on and on and on. Today, we're gonna cover especially grand, super, and cycle. We ain't gonna go that low. That's for our members, right? So the cycles is a language to be used to everyone understand the market. It's a language that is gonna give you that each cycle, when it comes in an impulse, it needs to advance and 5, 9, 13, 17, 21, 25, 29. That's what we develop, and we call it the impulse sequences. So the cycles here help you to understand that if you have 7 swing to the outside within an impulse, it's not completed. That's happening now from 2022. We're gonna cover that during the seminar. And that's how you identify and you use the cycles. I can forecast the market the same way without putting a label in the chart. Why? Because using the sequences, when it's impulsive, 5, 9, 13, you might hear about it because we posted a lot in the social media. Or when it is corrective, 3, 7, and 11, using the sequences, I don't need the labels. The labels is a language. And we use Elliott Wave, like I say, a different way. So everyone here should do understand what does the degrees mean. So this over here is an impulse on the Elliott Wave theory. This is an impulse. And explaining this before we go into the charts. What is an impulse? An impulse is an advance that it comes in a sequence of 5 waves. You got 1, 2, 3, 4, and 5. Basis rule. Wave 2 cannot pass the beginning of 1. Basis rule. Wave 3 cannot be the shortest. Basis rule. Wave 4 cannot overlap wave 1 in a complete impulse. You can only see an overlap of 4 and 1 and in a leading diagonal, right? In a leading diagonal, right? So in that way, you can see the overlap. So, and this is an impulse. Most of the indices, and I would say almost 99.9%, not to get a surprise, they're always trending in 5 waves. Now, this is an impulse which is usually not a bearish market, but with an ABC correction, because the index is always bullish. Put that in front of your computer every time that you want to sell the indices. The indices are always bullish. So this is a downside impulse. The other way is a upward impulse. So these are the different type of structure within impulse. An extended wave 1 to the bull market to the bear market. A regular, which is that happen the most, which is a 3rd wave extension, a 5th wave extension, right? And this is the sequence within the wave 3 extension. 1, 2, 3, 4, 5, 6, 7, 8, and 9. Now, it is important to understand this 1, 2, 3. 1, 2, 3 do not mean that this is wave 3. 1, 2, 3 is in the 3rd wave extension, which is when I want you guys to pay attention today, is to the 3rd wave extension. What is the point? 1, 2, 1, 2. Everyone understand that? 1, 2, 1, 2. That's important for today's seminar. Everyone understand that? Everyone understand that? Right? That's called an Elliott Wave, a nest, right? And the nest is when you got a series of 1, 2, 1, 2, right? That's a nest. Good afternoon, Jordan. So it is important to understand a nest. Why? Because you got 1, 2, 1, 2. Then you got 3, 4, 5, 4, and a 5. That is what we call a nest. Let me give you, because we're going to talk today a lot about the nest. And before I started showing you guys charts, I want you guys to understand the concept of a nest. 1 second, what happened here? Let me show you something. Okay, right here. If you look over here, what do you have? 1, 2, 1, 2, 1, 2. That's a triple nest. What happened then? You got 1 with no parentheses needs to go with 3, 4, and 5 without parentheses. That makes 5 waves from here to here. Then you got 1 with parentheses. It needs to go 3, 4, and 5 with parentheses. right here. That makes 5 weeks from here. And one with the cycle needs to go with 3, 4, and 5. At the end, if you count, you got 1, 2, 3, 4, 5. That's 5 waves. 6, 7, 8, 9, 10, 11, 12, and 13. What did I say earlier? That when the market is trending in an impulse, the market needs to have 5, 9, 13, 17, 21, 20, 25, 29, 34, 33, 37, 41. It's an outtrend sequence of 4. So that's a triple nest sequence, ends with 13 swings, correct? Everyone understands the concept. This is what driving most of the guys or most of the traders and servers around the world crazy now, right? Crazy now. The question, how do you identify 1, 2, instead of counting 1, 2, when the nest is forming? Because of the extension mirror, opaco. When there is no extension, I mean, besides, every time that you see 1, 2, 3, 4, 5, you're going to keep pushing. In Elliott Wave forecast, one of the rules that we have when laboring, we never pick a top of a bottom. When I see 5 waves, I say, okay, I'm bullish or bearish in the directions of the 5, but I start looking for correlations. And that's the key for today's seminar, because no question asked that the S&P that we're going to cover today is showing a possible soon to end 5 waves advance. And we're going to, understanding the concept, determine if they are 5 waves or they are a trap, right? That's what we're going to do in the seminar. But my point being is, everyone do understand what a nest is and looks like. 1, 2, 1, 2, 1, 2. Right? Everyone understand that? Yes or no? Everyone understand that, right? Very simple concept that it needs to be understand. So I know that this is how the nest looks like, the same chart that I show you. This is important to know, right? This is important to know, understanding the nest. And here is, we're gonna jump now to the next topic. We're gonna go and we're gonna start looking at the charts. So everyone understand what a 5 weeks advance is. Everyone understand that we use a different type of Elliott Wave theory. Everyone, I'm gonna be talking about instruments that we don't cover, because otherwise we cover 78 instruments and we select a group of these instruments for the seminar, guys. Don't ask me now about instruments that you want to know. You don't do your own work. Sorry, otherwise it won't end the seminar. So, idea, we different. The trend in the index is always bullish. We have a different set of rules for the Elliott Wave theory besides the 3 mains. The market trend in 5 weeks. The sequence is 5, 9, 13, 17, 21, and on and on and on. And a nest is a series of 1, 2, 1, 2 with a huge extension in the market. And when now your answer, you're gonna, about NVIDIA, you're gonna have your answer at the end of the seminar. You're gonna see. All right. Having explained that, let's jump into a point number 3. With that, I'm gonna go and I'm gonna see the S&P. This is the S&P right here within the grand super cycle. This is the popular count around the world, right? This is the popular count around the world. Don't you guys agree? Jordan, Marco, Gwinnett, Carol, Pedro, everyone there. This is the popular account around the world. Everyone is distracted because they see 1, 2, 3, 4 when COVID, and now everyone think that this is a flat. Sorry, that's a wave 5. If you count the swing, what do you have? If you count the swing, what do you have? You got 1, 2, 3, 4, 5, 6, 7. Giving. You can make and you can fix this count within a 5-wave band with a wave 5 extension. In other words, if we get back to the slide here, if you look at the 5-wave extension, right? If you look, you're going to see color at the end. If you look at the 5-wave extension, you can make the case that count fix this 1, 2, 3, 4, and the extended 5. Correct? Everyone? Yeah, it's valid. Don't you agree, Carol, Jordan, everyone? It's valid. Now, getting back to the count here. Getting back to the count here. Given that the wave 5 from the COVID lows, which are here, is 3 waves. Even though it's an extended wave 5, the market still needs to do a pullback and another leg higher. Right? The market, even in that case, is not completed. So at least if there were a crash in the market, still more upside should happen. I want to give you a data. Like I say, we cover 78 instruments. Every day in Elliott Wave forecast, we do 4 hours, 4 days in 1 hour. We do every day in a day of the 4 hours. Do the math. 78 times 4 plus another 78. That's easily almost 400 charts per day. Over the weekend, we do 300, and I believe that the math is that every month we do over 8,000 charts in Elliott Wave forecast. So do the math. And I can give you this hint. Indices do not, usually 99% of the time, they don't do extensions of wave 5. Most of the time, extensions of wave 5 happens in commodities, not in the indices, right? Most of the time. Now, keep going. Let's keep going. Let's keep going, right? The RSI within the next have to be progressive. What do you mean progressive? Most of the time, the RSI in the next is a weak RSI, right? It is covered, the RSI and the net is covered in our rules. So, no question, everyone understands that this count based on the Elliott Wave theory of 1930 is valid. It's a valid count. I don't deny that. This is a valid count based in 1930. But we live in 2024, guys. So we need to do better. We have tools now, right? We got tools now that we didn't have in 2020. So we have to use those tools and not be, in a way, no offense, lazy, and keep following a theory that is almost 100 years old and a book that is almost 40 years old. We need to do better, and that's what we have done. We've done better. So this is a valid count. I don't deny that. Now, as I always say, the market, I look at the market, Jordan, as I told you once, as a whole. S&P, yeah, I can count it that way. And I can say, this is the 5 weeks. If I'm calling for the super crash, world's coming to the end, AI is taking over the world, market is going to crash, a bunch of things that I can say. Bad thing. A third war is going to happen. U.S. going to become a dictatorship state. A bunch of bad things. Yeah, there might be a crash in the market. Yeah, I can show that count to my client. Right? I can show that count. Now, let's look at the RSI here. Let's look at the RSI here. And the RSI is very interesting. Why? Because you have a high, a high, a high, right? A high, a high, and then the standard wave phi is giving you divergency, right? It's giving you divergency. Interesting, right? Interesting there. Why? Because in a nest, right? In a nest, the RSI usually respect the first high or the first nest. This is monthly. If we go quarterly, then look, you got this. I use 13 RSI. And if I use yearly, I still got the same. So getting back to the monthly, like I say, nothing invalidates the 5 weeks in the RSI. To be honest with you guys, this can be a wave 5. Usually the standard 13, 1, 3. Usually the standard in force is the strongest one. So the RSI is not saying much to determine if this is this count, right? Or the count is this one, right? Yes, all time frames. Or this is the nest. That's the nest, right? That's another Elliott Wave view right there. Another Elliott Wave view right there. And there is another in which we ended wave 1 here, and this is your wave 2. And now we're gonna be doing this and doing this. So in my eyes, guys, there are 3 possible Elliott Wave counts when it comes to the S&P. 3. The one that with a pullback and a new high, the world is coming to the end, right? The world is coming to the end, which is this one. The one that is super bullish, 1, 2, 1, 2, 1, 2, a 4 nest, right? A quadruple nest there. And the one that is bullish, but is not that super bullish. That is something like this, that it goes 1, 2, 3, 4, 5 in red, finished one in blue, two blue, and now we are in wave one or wave three in the indices. Everyone understand the three counts, right? Everyone does understand the three counts. Yes or no? Now, as I said, we are in 2028, right? We are in 2028. And I'm going to give you guys a hint. Look at the RSI. The RSI is here. So I can make the case 1, 2, 3, 4, 5. High with divergence right here. And this is your whole, the wave 2 right here. It's perfect. The super nest, a high, a low. Right here, this is 87, 84, 87, 73, 87, 26. So we got a higher high, a highest low, a higher high, a highest low. Yeah, it's nesting in the RSI. How do you know it's nesting? You got 1, 2, 1, here, 2, 1, 2. You see a higher low high, a lower high, a higher low, a higher high, a highest low, a lower high, a lower low, and the RSI is gonna explode soon to the outside, right? So everyone understand the three counts, and I want you guys to put emphasis in these lows. This is October 22nd. Put emphasis in that low. This is March 2020. We did a seminar there. The recording is in YouTube. You can watch it. Me saying buy the indices, right? So I say I need to be a nest against 2022 or a nest against March 2009. And or that we're gonna finish soon the grand super cycle after 2022 ends and put back a new high. There is no other way. Those are the three counts. There is no another way around. Right? There is no other way. That's what it is. Everyone, there is no other way. Now, let's play around the correlation. Like I say, the market, it is not just about the S&P. S&P is part of the market. What you can get out of the S&P is that even in the most bearish count, the cycle from 2020 is not completed. That you need a 4 and a 5. So first of all, no reason to sell the market, right? So we believe that the market is as a whole. We get back here and we're gonna put the FTSE from UK in top of this Elliott Wave count of the S&P. And I want to ask you a simple question, everyone there. Are they trending in the same side or no? Do you guys think it is the same trend? Yes or no? Anyone? Jordan. Pedro say yes, but see, It's the same trend, right? Neo, yes, it's the same trend. I don't know why. It's the same trend. This is the grand super cycle trend. This is the grand super cycle trend. It is the same cycle. It is the same degree. It is right there without a doubt the same market. What about if I say that the S&P that is beautiful, 5 weeks advance, you cannot get the same market, you cannot get to label 5 weeks of the FTSE. This is the FTSE. Right? This is the FTSE. This is 2009. Right? This is March 2009. And this is 2020. 1, 2, identical. You got 1, 2. And both of them identical. 2009, identical. But the key is that the FTSE, the advance from 2009 to 2018, it is not an impulse in a regular way. Because the Elliott Wave theory say that wave 3 cannot overlap the top of wave 4 in a wave 3, George. So eventually, you have 1, 2, 1, 2, 3, 4, 3, 4, I believe. You got 5 waves right there. But there is overlap in between. So anyone there that believes that they understand Elliott Wave perfectly. Which one? Anyone that thinks that you understand Elliott Wave? Anyone? A volunteer there? Anyone? One person, guys. There is hundreds of people here. One person that wants to interact with me, that knows Elliott Wave. Anyone? Carol, Jordan, those, you two guys, Jordan and Carol, those, the FTSE, nesting of the FTSE is trending in an impulse. There is no B way there. Nah, there is no B way. It's nesting of an impulse. It's nesting. It's nesting. It's not a diagonal. Why? Because the first leg is a clear impulse. 1, 2, 3, 4, and 5. It's clear impulse from the all-time lows. It's a clear impulse. So the FTSE labeling is 1, 2, one nest in 2009, one nest in 2020. This is the 2022 low right here, September 2022 in the FTSE. Right? So the FTSE, as of right now, the best Elliott Wave count is a triple nest. It's a triple nest. You agree, Jordan, Carol? It's a triple nest. The diagonal gets invalidated because the first leg right here is an impulse, a regular impulse. So if it's a diagonal, is 1, 2, ABC1, and this is your wave 2. In order for this to be your wave 2, your RSI needs to break below the previous low. It didn't. So it's bullish, waiting for the acceleration of wave 3, like you say, Jordan. So I want to ask you, what does the FTSE, right? What does the FTSE? No, Caro. This is 1, 2, 1, 2, right? So the FTSE, we don't label truncations in Elliott Wave forecast. So the FTSE is a triple net, right? So what does Elliott Wave count does the FTSE support? This one? Oh, 1, 2, 1, 2, 1, 2. Which one? Which one support? Answer, you guys. The FTSE by itself support the nest in the S&P. No, the classes of Elliott Wave count there. Right? That's the FTSE. Now, this is CAT. C-A-T. He said all stocks, which we use it a lot because his price action is very always related to the market. So when I look at the FTSE, what do we have? Sorry, and CAT. You got 1, 2. Thank you, Jordan. I hope you like it. Then you have 1, 2, 1, 2. From here, all the way here, what do you have? 1, 2, 3, 4, 5, 6, 7, 8, and 9. But the third is the shortest, because in CAT, this leg is the shortest. What is the count? You have to call the CAT. It needs to do 1, 2, 3, 4, 5, 6. You are in the 7 swing. 7, 8, 9, 10, 11, 12, and it needs a 13. What does CAT support? Again, this cycle, this count or discount? Which one does support? The net, right? This is CAT Grand Super Cycle. Support the net, Caro. Don't you agree? Pedro, everyone, support the net. I don't see reason to be calling a crash. This is Southwest Airline. Another stock. This is the Grand Super Cycle. Beautiful. 1, 2, 3, 4, and 5. Right? And now it's lagging the market. It's lagging the market. But unless it goes out of business, this is 0. Unless it goes out of business, this thing is a classic 5 followed by 3. Doesn't support this view, because if the market crash, then in that magnitude, this is what we call the flow of the market, right? This is the flow of the market. In 2009, when the S&P crashed, you just need to look at American Airline, right? And you look at American in 2009. Many waivers in 2009, when the S&P did this leg, many waivers were calling for a seaway here to the S&P to 200. American back then, guess what? Was showing the floor of the market. Because if we break below Kia, after ending Kia, American, guess what? It wouldn't support another leg lower or another selling of this magnitude in the S&P. Do you guys get the idea? Everyone get the idea? What does the floor of the market mean? Everyone got the idea, right? Pedro, Carol, everyone. So I see that Southwest do not support a super crash in the indices. And we keep going. Look at Google. This is Google. Look at the RSI in Google. You see the sequence. Higher on the monthly, right? And you look at these lows. This cycle ended. This is the correction within the grand super cycle, and it started in 2022. If you look at Google, support discount 1212. You look at Meta. Anyone that understands Elliott Wave, what is Meta? A sideways advance or is a net? A sideways advance or it is a net? Right? Everyone? So Meta is a net within the grand super cycle. And besides everything, we need to relate the dollar. Many traders don't understand the relationship between the S&P and the dollar, right? And I'll give you this. This is the euro dollar within, this is the euro dollar all-time cycle right here. How many ways do we have? It's the same trend, just that this is an index dynamic. The dollar gets sideways. So the dollar himself, it finished 1, 2, 3, 4, and 5 weeks. At least you can look at the euro again here, and you can say that the euro is showing, the euro is showing 1, 2, 3, 4, and 5. So the euro either is gonna do this, or the euro is gonna do, but if the euro does this, look, right? So the say is that the dollar lower or sideways, which have the change now, support the index because the market has moved in different dynamics. And when in an index dynamic, which is what we are anticipating into the next few years, what do you have? In an index dynamic, what do you have? These are the basis dynamics of the market. Indices trade higher, yen pairs trade higher because of the indices. The yen got weak. The dollar is the one that gets sideways. The point made is that after the dollar if the dollar ended sideways, right? If the dollar ended that way, it has the chance to get sideways. So the indices need the dollar sideways to fuel into the long side. Right? Everyone? Everyone? So the dollar ending sideways support the view that this is not the count on the indices, that this is not the count in the indices. So what I'm saying is the following. When you look, you understand the three possible paths in the indices, right? You are right here, you have three different ways the indices. The natural 5 ways, the super nest, 4 nest, or 2 nest. And I believe in the idea I believe in the idea that the indices, that the FTSE cannot be labeled in natural 5 ways, right? Because they're overlapping. The Nikkei from Japan, you go to the Nikkei here, you show the Nikkei, and guess what? You're gonna get the same. Right? What do you have in the Nikkei? This is the Nikkei, and you got the monthly chart, right? You need to assume, like everything else, that 1, 2, 1, 2. Clear it, 1, 2. What is the key in the Nikkei? That there is overlap here, Carol. Right there is overlap. Now, I want you to look at the angle of this wave. This is like 45 degrees, 45 degrees, about 30 degrees, and it's getting more vertical. And nothing identifies a wave 3 more than a vertical move. Look at the previous degree. Look at the angle. You have here, here. Who's the most vertical? Is here. Right? Right? Everyone? So this angle here, but remember, there is overlap here. You guys see it? There is overlap there. That overlap, only you can label the Nikkei one way, Carol. It is 1, 2, 1, 2, 1, 2. There is no other way to label the Nikkei. And you are most likely in the middle of the wave 3 already. So when you look at the Nikkei cases, Guyer, Caro, Pedro, which support the 5 waves or the nest? Because there is no other way. So overall, guys, I give you this. There is no crash coming in the market. I honestly, in other words, I think that I have makes my point. Look at the Nikkei and the S&P. Look at the Nikkei there and the S&P. Right? Let's say, because these are details, I can label the S&P 1, 2, 3, 4. This is 3, 4 in red. You cannot do the same count in the Nikkei. Right? It doesn't count in the Nikkei. Right? Everyone? So for me, the way when I look at the Nikkei, I cannot come to the S&P and say that in this way, for example, I cannot come to the S&P and say that this is 1, this is 2. The S&P do not overlap. So the S&P can be 1, 2, 3. It will finish 3 and blue, 4 and 5. The Nikkei do not support that view because there is no extension here. And this one is the shortest. It's the shortest. It's a net. Right? It's the net. So it's obvious. I have no buyers. Honestly, I have no buyers. I have no buyers. Right? It is obvious. I have no buyers. I just, to go to the point, I just reading the market with an Elliott Wave that is a 2024 Elliott Wave. Right? I'm reading the market with a 2024 way of looking at the market. So I look at this and I have to say, I look at this and I have to say, the Nikkei that you are in, you have to, otherwise you're wrong. You have to push the more aggressive view in the indices again, the 2022 cycle against these lows. Caro. And the count that is supported by the Nikkei right here is that you are either gonna correct and create another nest like this. When you see the separation between the peak of wave 1 in the S&P 2022 and current highs compared to the Nikkei, yeah, the Nikkei has a lot of separation right here. The S&P do not. So I have to create another nest. 1, 2, 3, 4, another nest. A quadruple nest. 1, 2, 1, 2, 1, 2, 1, 2. With a huge acceleration to come. Because the Nikkei is calling it that way. The FTSE is calling it that way. Everyone, and the FTSE is that way. And the idea that the FTSE is lagging the rest is a gift that the market makers is giving us to us. It's a gift, right? It's a gift. So the market is nesting, and it won't be any crash in the market. It will be a pullback, given. It will be a pullback, but not a crash. Two different things. Two different things. A pullback or a crash. Anyone here see my point? Everyone here see my point? Everyone. everyone understands what it shouldn't be a crash. Everyone understands why this natural count, popular count in the S&P, it shouldn't happen. This count, it shouldn't happen. It's not valid. It's valid in the S&P. It's not valid in another indices or stocks, future stocks around the world. I was asked, is in Facebook, I think it was somebody asked, in Google, I was asked that it support the net. Absolutely. Right? Right? Because it's giving you a lower low, a lower high, a highest low, and a lower high. Exactly. This is somebody that been with Elliott Wave from Cash for more than 10 years. Look at his comment. I send it to you guys. And we always buying the indices and being aggressive with the indices because there is no reason not to be otherwise. Yeah, it's human nature. Yeah, human nature at one point here create a correction of the grand super cycle. But I don't see a correction now within the grand super cycle. Otherwise, I see a possible acceleration within the grand super cycle. So this count, which is very popular across the Elliott Wave guys in the world, and even professional servers around the world, I think it's wrong. Plain simple, wrong. Plain simple, wrong. And the reason is very simple, guys, because they are laboring using the Elliott Wave principle of 2000 and 1930s. They are not laboring or using the Elliott Wave principle in 2030. When the Elliott Wave theory was developed, it was based in the Dow Jones. It wasn't based in relationship between the Dow Jones and the FTSE, or the Dow Jones or the S&P with the Nikkei, or the S&P with Meta, or anything like that. Now you got the tools, use it. But most people don't want to live in the future. They don't want to look into the progress. They want to live in the past. And that costing money to many traders around the world. Right? It's costing money. We do this every single day in our live session. And our members, I don't mean, honestly. No, the divergency in Google, it makes Google more bullish. That's another mystery about how to use divergency in the RSI. Yes, when you see 5 waves, it's a sign of weakness. But when you see in Google, the divergency is a sign that is getting energy to explode. It's a different use of divergency. We use it, like I say, Gillet, we are different. We look at in the different way the market. We are not part of the rules that some people have created. We use our own way to see the market. It's a different way. For me, this divergency makes Google ready to explode. And last, I want to mention also another one. This is ExxonMobil. Look at ExxonMobil there, guys. And look at ExxonMobil and the S&P. You're going to tell me that it's not the same trend? It is the same trend, right? It's the same bullish trend. How you going to label and look at the RSI and ExxonMobil? Anyone there? do you guys think that this is part of this, or this is part of this? No, right? I guess David, Omar, Gillette, but Caro, Bati, Pedro. This is what we call a new cycle. And look at the other side. Divergency, divergency. By theory, what is that? It's a nest. It's a nest. Yes, but ExxonMobil trade with the indices. He lacked the indices when oil is trading lower. And that's what he's done here. But anyway, you look from here. 1, 2, 3, 4, 5, 6, 7, 8, and 9. This is the cycle from 2020. Got it. But it's undeniable that the trend in the S&P and ExxonMobil, it is the same trend, right? It's undeniable. Now, when when the S&P accelerates, oil becomes sideways to lower. That's why you see that ExxonMobil did not participate in this acceleration. I believe that ExxonMobil, yeah, it can enter a pullback soon, but the bullish sequence in ExxonMobil doesn't make the S&P bearish. Don't you agree, Carol? It doesn't. It doesn't make it bearish. It's a bullish sequence. So the question is not the daily cycles. The question is if a crash seen in the market foreseeable future. That's the question that we're looking over here. Right? Everyone? Does everyone has an idea about what we're covering, what we're saying? So we don't see a crash across the indices. Otherwise, we see soon a very good opportunity, maybe into the acceleration of our lifetime, honestly. And last, I want to mention, as a gift, I want to cover this cycle here in the S&P. I'm going to downgrade it to the weekly time frames or to the daily. And I want to ask you guys the following. How many waves do you guys, this is 2022, how many waves do you guys see from here up to here? Any guess? Because that is the last topic of the seminar, right? It's the last answer, let's say the October 22nd cycle. So from here, we are in the foreignness, yes. I don't care about fundamental, Giovanni, honestly. I don't follow fundamental trade. My analysis is based on what I explained to you right there. So the S&P is showing 1, 2, 1, 2, 3, 4, and we are in the wave 5 here. It should do 6. It should do 1, 2, 3, 4, 5, 6, 7, 8, and 9. So this nest from 2022, which is this one, it should extend to complete nice swing. And maybe by the end of the year, we're going to see a pullback in the indices. Another opportunity to buy. Right? What do you think? What do you think is a wave 3, no another 1, 2? You mean in the S&P? Because I explain it, because of the Nikkei. Because of the Nikkei, put it this way, I can label the S&P, if that's the right answer question that you're asking, I can move the S&P this way. That's what you mean? I can move it this way. And then we finish in wave 3 and 4. That's what you mean? Something like that. Oh, wave 3 from here? Because there is, I don't see, like I say, we do over 8,000 charts per month. Do the math. Almost 100,000 charts a year. We have the eyes training. And I don't see separation here. I don't, exactly, AG. Bingo. I don't see separation here. Right here, I don't see enough separation to finish and hold that high. It can be a wave 3 of 3 already, but the RSI is lacking momentum, right? So if this is your wave 3 of 3, Carol, the RSI should be erasing here, which is not the case. So that's why we're laboring another way, and that's why we're laboring another net. I hope that that answers your question. I have another question. If I can ask you, Eric, you have been very right for many years. What will you do with the money that has been in the market in 2005? In other words, that you bought it someplace around here? I will leave it. I will leave it. If I was my money, I will leave it. I will leave it. I keep adding. I don't see the trend ending. I make the case. I made the case. The Nikkei is not a regular impulse. It's a net. There is no other way, an Elliott way, to label a Nikkei other than the net. Look at the RSI here, reset. It erased the high, the RSI. This is 3 waves in the RSI. This market is as bullish as it gets, and this market can enter soon the rally of our generation. Put it that way. Semiconductor, do you think we got first to 56? I don't know. I don't know the answer to that. I believe that I believe it depends on where you're coming from, right? But each trader is a human being. Each trader has priority. As an example, you guys talking to someone that bought gold and silver in 2014. I hold it for 10 years, and I'm planning to hold it until I see gold over 3,000 and I see silver around 55, 60. I can see many pullbacks, and I keep adding to them. For example, this is an S&P. This is a gold pullback that our members bought it in 2022. Look, this is the blue boxes. This is CAT in 2022. We bought it there, right? And this is gold 2022. We keep buying there. It was at 16, now it's at 20 and change. It's about the trend now. If you bought it here, you might have taken you might have taken a profit. If you bought gold like me, which I bought it, or silver, which I bought it over here, you need to have your identity. That's something that that many traders lack, is identity. They don't know which cycle they're trading. This is silver in 2020. But if you, like me, I bought silver over here in 2014, 15. I will hold it until I see silver into the 56, 57 area. Right? So I will keep it. Now, if you bought gold and the blue box that we show you, you guys need to have your own identity as a trader. For example, this pullback here in gold is this chart. These are the blue boxes that I was talking about, that we added to our members. It's high frequency trader. This is the blue box right here. If you bought it there gold, you was buying there as a wave 5. You should have taken profit at 2200 and move on. But if you bought gold like me here, you don't take profit yet. You stay in the trade and you let the metal oscillate all he wants. Your target is 3,000. So it depends on where you are, but what I'm trying to say is that most of the increase in the semiconductor, they don't exist in when the S&P happened. But I'm not basing my forecast, Giovanni, in NVIDIA. I'm not basing my forecast in NVIDIA or in AMD. I'm basing my forecast in indices also. Because if you look, this is NVIDIA. Look, that's a wave 3, ladies and gentlemen, in the making. And this is 2020, 22. That's a wave 3, which it can go to the roof. And in the all-time cycle, it is 3 waves. Look at the RSI, the high is the high. Right? So it depends on where you're looking, where you enter. If you are a daily trader, AG, you should be taking profit. Let's say if you are a daily trader, you should be taking profit. If you bought 2022, you should understand that you will lose most of your profit very soon, right? Because like I said earlier, this cycle 1, 2, 1, 2 is showing 5 waves from here, and the RSI is lagging already in divergence. If you are a daily trader, this cycle should end before the end of the year, 2022, October. It should end maybe before the end of the year. And the market will correct that cycle. And you're going to see a very healthy decline in 3 waves. Another opportunity to buy. But the grand super cycle, that won't end soon. So if you bought it here, remain long. If you bought it here, remain long. If you bought it here, remain long. If you bought it here, take profit very soon. Not yet, but very soon. It depends where you're trading, right? So to put a conclusion to the seminar, guys, to put a conclusion to the seminar, my future path is very simple. The indices are everything but bearish. When I mean bearish, I don't mean a 4-hour pullback. When I mean bearish, I don't mean a 1-hour pullback, even a daily pullback. When I mean that they are everything but bearish, is that the yearly grand super cycle degree trend and the super cycle degree trend is very solid, and it can be entering the acceleration of our lifetime. That's what it means, right? That's what it means. Expectation is the path or least resistance is a super nest in the indices, either a 2-degree nest or a quadruple nest. Expectation that before the end of the year, the cycle from October 22nd ends, and it will provide another opportunity to buy the indices. I really hope you guys enjoy the seminar. If anyone want to see our view on the daily basis, we do this analysis, of course. We haven't talked about 1 hour or things of that nature. All we have done is talking about grand super cycle due to respect to our members. But you can take the trial here. It's a good time to be in the market, and good opportunities will come very soon. Join us. It's $9.99 for 14 days, right? You spend $9.99 in a hamburger nowadays, or in a pizza, small pizza. Take a trial. You want to like it, right? So I hope I give you guys my best. I hope you guys enjoy it, and see you around, either if you are a member or become a member in tomorrow live session at 11 a.m. Otherwise, see you around in the next seminar. Thank you, guys. Thank you, Caro. I believe so, Caro. We are the only one that use Elliott Wave different, right? Thank you, guys. So see you guys around. Have a good day, everyone.